Stock tip. Best stock setups.
Hi, I'm Marcel Tode and I'm back again with another daily update for you. It's been a long time and I've changed a few things, I realized I absolutely lack the physical time to take care of the videos and of the website, and that's why I've decided to cut my losses and make do with the most important thing, and that for me is the videos. So as of now, I'm going to continue with the videos, with the YouTube videos, and everything that I have. If I do have any new stock tips, which I always have every week, then I will be presenting them to you for free, and you get everything. Just don't forget to click that like and subscribe button. Now let's resume with a new state of the market. And basically with our daily update. So the S&P 500 and all of the markets had actually a pretty good day, a pretty successful day. At the height of the day, we were up 1.7% in the Nasdaq, and we had a small retracement here, but overall, you can see in the daily chart, in the intraday chart, it's all still looking very good. And if you zoom out a bit, you can see we still have a good looking chart. We have a low, a low, a high, a higher low, and we are aiming for a higher high now. If we get this higher high, then we might be in for a reversal here, respectively for an uptrend. We've been going down for 6 months or so, and it might just be the time to start going up again. Now, if you remember correctly, I've always said, since January, I've said that as soon as we reach 200 moving average here, I will change gears and I will go all in on the long side, and that's actually just what I did. A few weeks ago, as soon as we reached 200 moving average here, I think the level was 3,650 or 3,640, something like this. I bought myself another set of options here, expiring in October, and with a goal of 4,400. And I've been sticking to these options for the time being. And it's still looking pretty good. I had a bit of a scare right here, but they ended up being a reversal, and all is good, all is well, and now we are still heading up. I hope we are going to head up, and my personal opinion is that otherwise I wouldn't be all in on the long side again. So I'm deep in profits right now, but I'm a bit greedier and I'm expecting some more. So I will try to reason with you to explain why I think we are in the first stages of uptrend, and I'm going to explain it right now. So first of all, you can see here the 200 moving average has acted time and time again as a bounce, and we've also reached it right here, and we've bounced where. The question is, are we going to go a step further, respectively, are we going to reach the next support line here in the range of the 50 Fibonacci 3,500, or are we going to continue going up again? Well, I myself think we're going to continue going up again. This was a very good, very solid support line here, and for the time being, it has held. In the daily chart, we have a higher low, and if you get another higher high, it might just be just what we've been waiting for this time. Then if you take a look at the Nasdaq, this is the next argument here in my case. If you take a look at the Nasdaq, we also see here the same story. So we've touched the 200 moving average in the weekly. We've made a nice bounce. We are again above this Fibonacci line, and in the daily chart, we've broken out of this formation here. So this is a good positive thing, and the IVM also shows signs of a convergence. this one right here. So this was not a reversal, but again another reversal, and we are moving up again. So the one thing, but IVM, where we have the 2000 biggest, the 2000 small caps, which are a big part of the market, is looking very interesting if you zoom out in the weekly chart. And by that I mean this formation here. So you see here a setup, one touch, two touches, three touches, and then a breakout with a gap here, right here, breakout with a gap above this. Then back then it was a resistance line, then a breakout, and now we have a correction, a pullback. And again, we've reached here no less than 3 support lines. One of them is the 50 Fibonacci retracement. The second of them is this original trend line here. And the third of them is the gap. So we are still inside this gap here. We've attacked the gap, we've closed the gap, and then we've retracted above the gap. So we are at a convergence of 3 major support levels here, and so far they have held pretty well. So if you take a look, to summarize, if you take a look at the SPY, at the NASDAQ, at the IVM, at their historical supports, they are looking all pretty well right now, and they're pointing for for an uptrend for the next few weeks or months. And I can back it up by looking at Apple in the daily chart, so at least in the short term. If you look at it in the daily chart, you see here finally, since this second high here in April, we've broken through this trend line, and so we've broken out of this trend line, and we are heading up again. I do admit that the volume is a bit lacking, but that's how it is. Well, the same story here in Microsoft. This setup is not that long going like the other one in Apple, but still, 1 touch, 2 touches, 3 touches, and now by the 4th one we have a breakout, and it's looking good again. So this was a low, higher low, so low, high, higher low, and now we are going for a higher high. So also the beginning of a trend change. And Amazon, pretty much the same story. I've seen people saying this would be on head and shoulders formation, but no, we've pulled up again and we are heading up. So at least a couple of days we should still be in the green here, with Apple, Amazon, Microsoft all having a bit of an upside between 7 and 10% each. So the next, at least in the short term, I think, at least in the short term, that the market is going to be a bit bullish. But honestly, I'm still believe that the market might just be turning green again for the next few months. So this is my case for the markets going green and for my long position. And if you ask me where the next resistance line is going to be, well, it could be here, the 50 moving average, 50 daily moving average. It's reasonable to think that it's going to be there. But I also might say it's going to be here at the next Fibonacci level, 23.6. This is also reasonable to think perhaps until then we are also going to come down with the 200 daily. So this might be it, or it might be a bit lower here, 4,100 or something like this. Well, these are all possible resistance lines, but then again, the biggest of them all would be 4,400 or 4,350, something in this range. So this would be the biggest resistance line. For the time being, at least in the short phase, I think the market is bound to go perhaps tomorrow reach 4,000, and if you are lucky, we are going to reach 4,200 the next few days or weeks, and that's where I would take my first profits. If you don't get there, then I think I'm going to give up on it. But that's where I would take my first profits. If you're not trading options and you're trading CDF or direct an ETF, then I think the reasonable stop would be right here. So right here beneath this youngest low here. So that's my case for the markets. You can also look how the rest of them are doing. Euro to US dollar, we see a continued weakness here in euro. Of course, this has something to do with the inflation here and with the Ukrainian-Russian war. Then oil has had some pretty bad days, but it has found some support at the 200 moving average. But I would say this trend that we've been seeing for a couple of months now, starting January or even December, is for the time being a bit broken. So I think you are advised to be careful there, and gold and silver are no longer in play anymore. They are both looking very weak. So this is gold in the a weekly chart right now, so this is looking very weak. Perhaps it's also going for the 200, but historically seen, the 200 moving average in the weekly chart hasn't acted pretty much like a desired support level, and silver is looking still worse than gold. So overall, these last two precious metals are definitely not in play anymore. So right now, I would be investing, at least in the short term, in the blue chips like Apple, Amazon, Microsoft, or directly in the Nasdaq or SPY. Myself, I'm invested in the Nasdaq, and honestly, I have two setups which I'm following with very much interest. One of them I've activated today and bought a pretty nice position. This one is AERC. You can see it in the weekly chart. It's a nice setup, and the daily chart is looking just as well, with a nice breakout. It would be nicer if the volume would also suffice, but the volume is lacking. And so there's not that much interest for the time being from big players. I shall see if some interest is going to come again tomorrow. If not, perhaps I will reduce my position again. And the second setup here is of pure interest to me because I didn't have the capital to buy a stake in it anymore. I've been telling you about JKS, and it was one of the setups of the weeks from StockTip. And I've told you then I love this setup because of this consolidation just below the trend line, and nice consolidation over the length of 10 years. And then with a breakout, and again consolidation inside this triangle, and another breakout. So this breakout was even nicer, breakout, pullback, and then another breakout. And since the breakout, we've already added 23%. So it's of pure interest to me. I hope some of my subscribers have bought it. And even if we aim for 150, which is pretty conservative actually, pretty conservative. So I think we are going to go way higher with JKS. But even if we aim for 150, it's still a 100% upside here. So congrats to all of those who've taken a chunk of JKS. It's a setup which I absolutely love, and just be patient with it and let it run out of steam. So I think you have a couple of weeks, if not months. So I would definitely let it run and let it try its best. That's all for today. Remember to hit the subscribe button, and I'll see you again tomorrow when the market closes. And that's all. Thanks for watching.